I'm Barbara Nevins Taylor. If you own property and have a mortgage, bankers may tell you it's a great time to refinance, and they may be right. But is it right for you? Here's what you need to know.
The rates right now are at historical lows. And for those who have gotten mortgages in the past, even if they've refinanced in the past, now they're low enough again for people to do it a second time.
Refinancing works for you if you reduce your monthly mortgage payment without significantly increasing your mortgage debt. So you want to keep fees low and get the best interest rate.
Banks are competing for your business. Let them do that.
Different banks offer different deals. That means you need to shop around.
Every bank will have different goals at a certain time. You know, like our bank right now, we have wants 15-year mortgages, so our rate is 2.75%.
Rates change weekly, and the rate you get may depend upon your credit score. Banks generally use the FICO score, a statistical compilation of your creditworthiness. Scores range from 350 to 850, and the higher the better.
If you have a 740 or better, that's considered A credit.
But again, different banks have different rules. For example, at TD Bank,
we would look at anything from 680 and up.
While at Amalgamated Bank,
lowest we go is 620, which most people would qualify.
Okay, next.
The first thing you should be doing is when you speak to a lender, you're asking for a good faith estimate.
That spells out the fees, usually 2 to 3% of the loan. For example, on a $500,000 mortgage, 2.5% equals $12,500 in fees. But some of these fees are negotiable.
The fees you can negotiate are like everything else in life. You really could negotiate anything.
That's why you need to go over the good faith estimate to discover what the fees are as early in the process as possible.
You want to know as a consumer what you're paying for.
First, there's the application fee, $65 to $640, depending upon where you live. You can usually ask the bank to refund that money if you go with their deal. Then there's the loan origination fee of $2,000 to $3,000. That's for paperwork and processing the loan. The bank may also charge points, generally 1% of the loan. That's to reduce your interest rate. But again, these fees are negotiable if you ask.
Get a good faith estimate from another lender and bring them in to compare.
You pay the appraisal fee, $300 to $1,000. But if you ask, the bank may pay for it. Then there's $500 to $1,000 for the bank's attorney. Notary fees are about $250. The title search is generally $700 to $900, and in some cases, much, much more.
The title company is going to be doing a search on the property to make sure that no other entity can make a claim against that property in the future.
Ask for a break because you're refinancing.
The same searches don't have to be done because you live in your house, so that saves money there.
Nevertheless, you'll pay title insurance for you and the lender. It's usually a percentage of the loan. Fees range from $175 to more than $4,000, depending upon where you live. And banks generally require prepaid taxes and homeowner insurance. They hold the taxes and insurance in escrow. Government recording fees and transfer taxes also add to your bill. They vary from state to state. In New York, there's the Consolidation Extension Modification Agreement, or CEMA. That's an agreement between banks. It transfers the tax so that you don't pay it twice.
But watch out, because some lenders will not do that CEMA agreement.
That's because the bank is essentially holding your business hostage. Check to see if your bank penalizes you for getting a mortgage elsewhere. And because of high fees, in some cases, it does not pay to refinance.
You only have, say, $30,000 left on your mortgage. It really doesn't pay. And you're better off taking that money that you pay for the closing costs, putting it in your mortgage, maybe doubling up your payments.
If you do decide to refinance, it's your choice to pay fees up front or fold them into the mortgage, which increases the amount you owe.
There's really two ways to look at it. You could try to keep your monthly payment as low as possible and pay it up front. Or you can hold on to that money because with rates being so low, that money might be able to be better used for you in the future in other investments.
Refinancing is great if you reduce your monthly mortgage payments significantly, don't end up paying high fees, and don't add a whopping number to your mortgage balance.